The store says your refund is complete. The email says approved. The receipt says refunded. But your card balance has not changed. The original charge is still sitting there. And the money feels missing. That makes the store's message sound false. Sometimes it is simply premature. The word complete may describe the store's system. It does not necessarily describe your bank's system. A card refund has more than one finish line. It starts with the merchant and travels through the card system before the issuer can post it. Only then can it appear on your account. That is the first hidden fact. The store can finish its step before the refund finishes its journey. A refund is not always an undo button. Sometimes the original payment is cancelled before it finishes. Sometimes the original payment has already finished. In that case, the system needs a new transaction moving in the opposite direction. Today we follow one return jacket through both paths. The jacket cost $120. The purchase appeared instantly. The refund did not. To understand why, start with the payment that came first. You tap your card at the store. The terminal sends an authorization request. That request does not travel directly from the store to your personal account. It normally moves from the merchant side to an acquirer or processor. The card network routes it toward the issuer. The issuer is the institution that issued your card. The issuer checks the account and the transaction. Then it returns an approval or a decline. An approval tells the merchant that the transaction may proceed. It can also reduce the credit or funds available for other purchases. But approval is not the end of the payment. The merchant still has to complete or capture the sale. The transaction record then enters clearing. Clearing is where the participating institutions organize what each side owes. Settlement is where those obligations are paid between the institutions. The Federal Reserve describes authorization, posting, clearing, and settlement as distinct parts of the card process. Their timing can vary with the institutions and the transaction. So the authorization, clearing record, settlement record, and account entry can update at different times. Those records refer to the same purchase. But they are not the same record. This matters when the purchase is cancelled. If the sale has not completed, one kind of message may stop it. If the sale has completed, a different kind of message has to send value back. The moment of cancellation decides which hidden path becomes available. Imagine that you buy the jacket and change your mind immediately. The merchant has an authorization. But the merchant has not completed the sale. The purchase may still be pending. At this stage, the merchant can cancel the transaction. The payment system calls the release message an authorization reversal. Visa's current rules require reversal processing when an online financial transaction is voided or cancelled. MasterCard's rules also distinguish full and partial reversals of previously authorized transactions. A full reversal says the approved amount is no longer needed. A partial reversal says only part of the approved amount is still needed. The important point is that a reversal attacks the unfinished authorization. It does not create a second purchase. It tells the system not to complete the first one. That can change what you see. You may expect a positive $120 credit. Instead, the pending negative charge may simply disappear. Stripe describes some prompt refunds this way. The original charge drops off, and no separate credit appears. From the customer's perspective, the result looks like deletion rather than a new deposit. This is why searching your statement for the word refund can fail. No money had to travel back because the unfinished charge never completed. What returned was your available credit or funds when the hold was released. The visible evidence is the absence of the pending charge. Now move the return 1 week later. The original jacket purchase has already posted. The reversal path is no longer the right mental model. The system now needs a new credit. You bring the jacket back after the original charge has posted. The merchant accepts the return. The merchant's register creates a refund record. That record points back to the purchase. But it does not erase the purchase from history. The original sale is no longer just a pending authorization. So value has to travel back through a new message. Visa calls this a credit transaction. MasterCard treats a refund as a transaction with its own authorization and clearing requirements. In plain English, the refund is a new transaction moving in the opposite direction. The merchant and its acquiring side submit it into the network. The network carries the refund record to the issuer. Then the issuer posts the credit to your account. The participants resemble the original purchase path, but the direction of value is reversed. The two transactions remain separate. Your statement can therefore show the original charge and a later credit as two separate lines. That is a record of two real events on two different dates. First, you bought the jacket. Later, the merchant accepted it back. Visa's rules generally direct the merchant to return the credit to the same payment credential used for the original purchase when possible. That rule helps connect the refund to the original cardholder. It also reduces the temptation to turn a return into a transfer to an unrelated card. But following the same card does not make the trip instantaneous. The refund still has to cross every remaining handoff. The cashier presses refund, and the merchant's system creates a record. The processor and acquiring side accept and submit it. The network routes it to the issuer. The issuer posts it to your account. That final step is the finish line you can see. Different companies use words such as created, pending, submitted, succeeded, and posted. Those labels are not interchangeable. A merchant email can be accurate while your balance remains unchanged. It may prove that the merchant created the refund. It may not prove that the issuer has posted it. Stripe tells merchants that customer visibility depends on the card network and the issuing bank. Its published example is approximately 5 to 10 business days. That is an example from one processor. It is not a universal law for every refund. Some credits arrive much faster. Some transactions use faster refund capabilities. Some issuers update available credit before they update the statement view. And a reversal may never create a separate positive line at all. This is why a single promise such as 3 days can mislead. The better question is not how long refunds always take. The better question is which participant has the transaction now. To answer that, you need evidence that survives the handoffs. Start with the merchant receipt, refund amount, date, and original payment method. Then ask whether the merchant voided the sale or issued a refund after posting. Those are different paths. If it was a reversal, the original pending charge may disappear. If it was a refund, look for a separate credit. Next, ask whether the refund has a network reference. One common reference is an acquirer reference number. Processors can use that reference to help an issuer trace a refund. Other networks or processors may use a different reference. A reversal may not have the same kind of refund reference. That is because the original charge was cancelled instead of credited later. The reference does not make the money move faster. It makes the transaction easier to locate. Without it, the merchant and issuer can point at each other. With it, the issuer has a specific record to search for. The original card may also have expired or been replaced after loss or fraud. That does not automatically destroy the refund. Issuer systems normally handle refunds to expired or canceled cards and often route them to a replacement account. If the issuer cannot route the credit automatically, the customer may need to contact the issuer. In rarer cases, the refund can fail. Then the refunded amount can return to the processor or merchant side. So the old plastic card is not the final destination. The issuer's account relationship is what matters. The next question is what kind of account received the credit. On a credit card, the original purchase increased what you owed and the refund normally reduces it. That means a refund is not always cash entering a checking account. It may appear as a credit against the card balance. If you still owe more than the refund, your debt becomes smaller. If the refund is larger than what you owe, the account can move below zero into a credit balance. The Consumer Financial Protection Bureau describes a credit balance as money the card company owes you. You can leave that credit to offset future purchases. Or you can ask the issuer to return it. For qualifying U.S. credit balances above $1, Regulation Z requires the creditor to return the requested amount within 7 business days after receiving a written request. That rule governs a credit balance held by the card issuer. It does not promise that every merchant refund reaches the issuer within 7 days. Those are two different clocks. First, the merchant refund has to arrive. Then credit balance rules can become relevant. A debit card refund lands in the deposit account linked to the card. So the returned value affects money available in that account. That difference can matter when the customer needs cash for rent or food. A delayed credit card refund can leave less borrowing capacity. A delayed debit card refund can leave less deposit money available. The screens may also tell the story differently as available credit, pending items, and posted items update on separate views. The original charge can appear in one statement period. The refund can appear in the next. None of those layouts changes the underlying two-transaction structure. One record charged the account. The other record credited it. But sometimes the amount itself is the source of confusion. Suppose the jacket cost $120, but the original order also included shipping. The merchant's return policy may treat shipping or a disclosed restocking charge differently. Those are merchant policy questions. The card network does not decide whether the jacket was returnable, it carries the transaction the merchant submits. A refund can be full. It can also be partial. More than one partial refund can point back to the same purchase. But the total should not exceed the amount available to refund on the original charge in the processor's system. This creates another common misunderstanding. If the customer expects the original total but the merchant submits less, the disagreement is about the merchant's calculation rather than a missing network transaction. That problem belongs at the merchant policy layer first. Now imagine the merchant submitted the correct amount. The issuer still cannot process the credit. The account may be closed without a usable replacement path. The transaction data may be invalid. Or the refund may fail elsewhere in processing. Processor documentation recognizes failed refunds as a separate outcome. When that happens, the value can return to the merchant or processor balance. The customer does not receive the credit. The merchant may need to issue it again or use an allowed alternative method. This is why a refund receipt is evidence of initiation. It is not always evidence of final posting. If the merchant and issuer cannot resolve the missing record, a different system may become relevant. That system is a dispute. A merchant refund begins with the seller, while a card dispute begins with the cardholder and issuer. Those paths can interact, but they are not interchangeable. The Consumer Financial Protection Bureau tells consumers to contact the seller first about a refund. If the seller does not fix the problem, the consumer can ask the card issuer whether the charge can be disputed. Visa describes a dispute as the reversal of all or part of a transaction's value from the issuer toward the acquirer and usually the merchant. That is not the same as the merchant voluntarily issuing a credit. A dispute opens a rules-based investigation in which the issuer and merchant may exchange evidence. The final result is not guaranteed simply because a return was requested. Starting a dispute while a real refund is moving can create duplicate reimbursement risk, which processor guidance warns merchants to manage carefully. So a chargeback should not be used as a trick to jump the refund line. It is a remedy for an unresolved eligible problem. For U.S. credit card billing errors, timing also matters. The CFPB tells consumers to send a written billing error notice within 60 calendar days after the issuer sent the statement that first showed the error. The issuer generally has 30 days to acknowledge that notice. It then has up to 2 billing cycles to complete the investigation. The consumer still has to pay correct, undisputed charges on time. Those rules do not make every return a billing error. They also do not make debit card rights identical to credit card rights. The safest practical sequence is to identify whether the charge is pending or posted. Then ask whether the merchant sent a reversal or a refund. Collect the date, amount, receipt, and transaction reference before asking the issuer to trace it. Use the appropriate dispute process only if the problem remains unresolved and qualifies. Now return to the $120 jacket. If you cancel before completion, the pending charge may vanish through a reversal. If you returned it after posting, the original charge remains and a new credit travels back. If the store says complete, that may mean only the store completed its step. And if the refund is still missing, the answer is not hidden inside one app screen. It is hidden in the handoff between systems. The approval was not the money moving. The refund email is not the money arriving. Both are messages about a process that still has more steps. The next time a refund seems to disappear, ask which transaction you are looking for. Ask which institution has seen it and which finish line has actually been crossed. That is the hidden system behind the missing refund.